All right, today we're cracking open the investment memo on CarGurus. You've probably heard the name, maybe you've even used this site to find your last car. But the real question for us is simple. Is it a good investment? To figure that out, we've got to look past the homepage and into a story of a near-perfect business that took let's call it $1 billion detour.
Now, on the surface, the story seems incredibly straightforward. CarGurus is, and this isn't even close, the #1 most visited digital car marketplace in the entire United States. They are the undisputed king of connecting car shoppers with dealerships.
So if they're #1, what's the problem? Well, this is where it gets interesting, because behind that simple success story is a much more complicated tale. It's about a company that built an absolute fortress, then nearly abandoned it for a really risky adventure, and is now trying to find its way back home. It's a classic business story of getting a little too ambitious. To really understand the drama here, we first have to appreciate that fortress. We need to look at just how strong and how incredibly profitable their main business really is.
And this chart just lays it all out. In 2024, a whopping 92% of the company's revenue came from its core marketplace. This is not some diversified tech giant. The company's health is almost entirely tied to this one single, very powerful business.
And when I say powerful, I mean dominant. Just look at this traffic comparison. CarGurus pulls in about 60% more monthly visits than its closest competitor. In the world of online marketplaces, eyeballs are everything, and CarGurus has built this massive, sustainable lead. So how'd they do it? What's their secret sauce, their competitive moat? Well, it really boils down to 3 key things. First, you've got powerful network effects. It's that classic loop. More dealers list cars where the shoppers are, and more shoppers go where all the cars are. Second, data and transparency. Their deal ratings, like Great Deal or Fair Deal? That built incredible trust with users. And finally, all that trust is hardened into a really powerful, recognizable brand.
And the result of building this fortress? Insane profitability. The core marketplace business runs with gross margins of nearly 89%. Think about that for a second. For every dollar of revenue that comes in, about 89 cents is gross profit. It is an asset-light cash printing machine. Which honestly makes their next move all the more baffling. When you've got a fortress this strong, why would you ever decide to venture out into a completely different and way more dangerous territory? This brings us to the great detour.
So, back in January 2021, right in the middle of that crazy used car boom, CarGurus bought a company called CarOffer. It was a platform for dealers to buy and sell wholesale cars from each other. At first, it looked like a genius move. Revenue shot through the roof, peaking in mid-2022. But then, as the market cooled off, a crisis started to brew. The business model had some deep, deep flaws, and by late 2023, CarGurus had to announce it was shutting the whole thing down.
So, what on earth went wrong? Well, it really came down to a fundamental mismatch. The core CarGurus business is all high-margin software and data. It's about bits and bytes. CarOffer, on the other hand, was a low-margin physical logistics business. It was about moving actual metal, doing inspections, handling disputes. They weren't just in a different market, they were playing a completely different sport.
Now, to their credit, management did eventually own the failure. The CEO, Jason Trivison, publicly admitted that when it came to CarOffer's operations, especially things like vehicle inspections, quote, "We were a little too lenient. And that leniency, it led to soaring losses as soon as the market turned, which basically forced their hand." And that brings us to the final chapter of this story, the comeback. After learning a very expensive lesson about straying too far from home, leadership kicked off a decisive return to discipline. The plan was refreshingly clear and direct. Step 1, cut the losses and shut down the CarOffer business, period. Step 2, refocus all of their energy and money back on the super profitable core marketplace. And step 3, use the cash that core business was printing to directly reward shareholders.
And they weren't just talking. They absolutely put their money where their mouth was. Since 2023, the company has authorized a massive $400 million for share buyback programs. That sends a huge signal of confidence in their core business and a real commitment to shareholder returns.
The impact of this renewed focus was immediate and, pretty dramatic. Just look at this profitability turnaround on the chart. The company swung from a net loss of over $22 million to a net profit of almost $46 million in a single year. It turns out, getting out of the wholesale business instantly healed the bottom line. It was like flipping a switch. So all of that brings us to the most important part. We've seen the fortress, we've seen the detour, and we've seen the comeback.
what does this all mean for the final investment verdict? Well, our assessment of management is a bit of a mixed bag, but it is trending positive. They get strong marks for operational execution. They run that core business incredibly well. And they also get high marks for adaptability, because they were willing to admit a huge mistake and pivot hard. But the whole CarOffer saga earns them only a fair on strategic vision. It was a major and very costly misjudgment.
And this all leads to a very clear bull versus bear case. The bull case is pretty simple. You have a dominant market leader with fantastic margins that just got rid of a huge distraction and is now laser-focused on its profitable core. The bear case? Well, the auto market can be cyclical, and that past misstep does raise some questions about how they'll spend their cash in the future.
So our final takeaway is this. CarGurus is a market leader that was humbled badly by a billion-dollar mistake. But that humbling experience forced a return to discipline. The company is now focused squarely back on that high-margin, cash-generating fortress that made them so successful in the first place.
Which leaves us with the final question, really for you to consider. With that very costly detour now firmly in the rearview mirror, has CarGurus finally found the clearest, most profitable road ahead?